Hey, good afternoon, guys. This one's a subscribers only stream, right? So, one of the questions yesterday on the technical question channel, right, was a question about COT data in general, right? But the reason I said, look, this is easier for me to kind of answer this as maybe more of a video rather than just kind of putting an answer up there is you got to look at kind of what's going on, right? Kind of in the bigger picture, and obviously the COT data it's one lagging and two it's a sample size, right? So instead of looking at it going, what is it this doing, exactly? How is this going to play out in terms of the move? You've got to treat it more almost just the bias, right? Just more in general. So if you look at what's actually on the screen here, right? This is obviously only an 8 hour chart. And this isn't picking out anyone. This is just probably a good way to use this because obviously this was posted as the chart to kind of to view, right? So everyone kind of sees the same data, everyone's seeing the same thing. So if we look much bigger picture, right, which is why I've pulled this out. So this is the Australian dollar, US dollar. Now, if I was to do this from an Elliott wave perspective, I can come out and I can zoom, way, way, way back. This goes back to, 2011, right, the last kind of swing high. Right? So as we see this move on down, right, we then had, I think this was the COVID spike down here, right? So for me, right now, what I'm seeing is that first thing that happened that's obvious is we had a move and we had that kind of break of structure, right? We've then come and carried on through, which technically is the change of character. So for me, the obvious starting point is down low. And I don't want to look back at 11 years, 12 years, 13 years kind of anyway. I'm looking at what's kind of happening right now. So if I was to just guess where we are right now, I could look at this as a potential one, right? And then I'd look at this as a potential two back down. Now the major issue being is you would expect this to be a lot more impulsive given that this is a three, right? And this is just the assumption that we're going to see a three, right? So what I want to look at is at the bottom there, instead of trying to figure out what Elliott wave move within, where we are with a Wyckoff schematic and this, that, and the other, I just want to say what's going on inside there. This is a monthly time frame. So if I can drop that down to a weekly, and I can say, well, overall, from there to there, we've kind of gone sideways, right? Now, although this is a little bit harder in terms of now putting the pieces together, the building blocks, this is where it becomes kind of less is more in terms of the information again. Right? I'm going to see this and I'm going to see the vast majority of the volume is probably in this range, right? So there's my kind of bottom range, there's my top range, right? And that's kind of more the range that I'm interested in, right? So the POC, probably looking at this there, the POC is, ideally just a bit lower than where we are, 66.40-ish, right? Now, let's obviously use that. Let's try and put this on, right? I'm going to go from the low, so this might change, obviously, the move a little bit, right? But I want to put this on, not just in the range, right? The first one there is obviously a little bit higher, right? Now, you could come in and say, let's do it specifically from when we entered that range, when we come out to that range and kind of where we are there. And we might get that a little bit lower, but it's not enough to worry about, right? That's kind of the point. So, going back to the question, right? The way that I'm seeing this right now, and I'm not just me, this is just in terms of the way that I'm reading this, right? This isn't what I'm saying, hey, this has to happen. It's just the way that I'm currently viewing this. If you think of the size, right, of the kind of scale that we're talking about for a monthly move to go impulsive, how much in terms of the orders need to almost be not hidden away, but moved around and change of hands for a move on this scale to actually play itself out. So if you look at the image here, what we've got is almost a swap between the increase, right, and the drop off, the sell off of the position whilst in that range. Okay. So what we're looking for now is any kind of indication that we've actually had an increase, right? And this is where we start looking at these numbers are pretty similar, but pretty comparable, right? So change long, change short. Right? Now this goes back. I think this is March. Oh no, this is probably the other. So this is the American, the American way of doing the dates. So in theory, going back to where we were, what are we? April, May, and then June. So June, May, June time, right? This period here, the shift that we had there, right, is minuscule in the grand scheme of things, right? Look at the numbers there compared to the numbers starting to pick up here, right? So this is the first indication that something is different than what it's been, since then, right? Now, obviously, these numbers are kind of play numbers in the grand scheme of things. Now, if you can see that there's an average, and I haven't gone back personally, I will do this. I hadn't thought of this prior to making the video. But if you look back and you can kind of see an average level, let's just say that it's somewhere around the 10,000 mark, 9,000 mark. There's going to be a bit of a difference in that sell-off, right, and the open. What that then is going to see, and what you're going to be able to see, is the difference in the net positions. Now, it's not as simple as saying, well, when this goes positive, you buy it. There's a little bit more to that in terms of where the strategy comes in, where this refines. Where the advantage of the COT comes in is to kind of give you an idea of what's happening kind of under the hood, what's actually going on, bigger picture, and as to why. Now, personally, I've talked about DXY rallying up. I'd love to see DXY go all the way up to 118 bigger picture, which ultimately means a drop rather than a rise for things like Aussie dollar. Right? But the one thing that you'll see is the percentages in this transition period. If DXY goes up, let's just say 1%, right? It doesn't necessarily mean that Aussie is going to fall 1%. What you might find is that DXY goes up 1% and Aussie might go up 0.3% in one move, or down 0.3%, sorry. This transition is the transition within that range period, right? So for me, I'm seeing this as kind of a bigger auction area. That bigger auction area, the bigger auction area in general, is what's going on, under the hood. Well, under the hood, clearly, we're starting to see a shift in terms of the long positions. So that's really what we, kind of confirming with our bias. If we were to zoom into this, let me put something like the Weiss wave on, for example. And this is where the COT data, obviously, one being lagging by a week, but too much of a bigger picture in terms of the small view of this, right? So I want the Weiss wave basic. And what I want to be looking at is there anything there that's kind of pretty obvious at the moment, right? And we've got probably pretty consistent buying, right? And we've got large scale sell-offs. Right? So given that move was that move down, we're in a position where we're not ready yet, right? And the reason that we're not ready yet is there's not enough buying going on just yet to see this, rally. Although the accumulation is going on from a COT perspective, these guys are much, much, much bigger in that picture. Right? So the way that I'm reading this right now, we've got a weekly time frame that I'm viewing. We're already at the overbought situation, and we're already nearing the top of the range. Okay, so I'd like to see another pretty big red, well, not big, but a similar red move in terms of the Weiss volume here, right? And giving us one more drop down as we get one more rally up, right? Now, the rally up that I've talked about, 108 for DXY, should bring us back down to a respectable level. Right? Now, the reason that I'm saying this is where it gets, I suppose, more interesting, bigger picture, is if we were to make an impulsive move, that impulsive move would take, 108 back down to, say, 104 DXY. And I'm just assuming the numbers, right? This isn't going into kind of the depth. 108 to 104 would give us a move that could look like this. Right? Then what you have is the move outside of the box, the change of the character on the weekly time frame, would actually require a pullback too. Now it's the pullback two, which is then really deep, right? Now, again, think of the logic behind what needs to happen in that pullback. People need to think that it's going down, not up, right? So this is why these pullbacks are pretty deep on the two. But also, what you might find is that the percentage that changes as DXY rallies, say, 3, 4, 5% in its move, we're only seeing a 1 or 2% pullback in terms of Aussie dollar, right? Now, obviously, for me, I'm seeing that move up to, say, 118 and beyond for DXY, not as the end of something like Aussie dollar, because, especially Aussie compared to something like Euro or even the yen, Aussie is kind of almost decoupled a little bit more from dollar in general. And if we were to see global recession, or we were to see DXY kind of rally on through, there's nothing stopping Aussie dollar being one of the front runners that would actually be the mover and the shaker first, compared to something like euro when that crashes and kind of rallying back through. So look back at the charts in terms of COVID, look at kind of similarities, look at even the COT data at that particular point. So what I'm seeing right now is relatively small accumulation, right? But the difference in this compared to something like Bitcoin, right? And this is again, why it's such a laughable state at the moment with the crypto, is the accumulation that's going on is consistent, right? The COT data is starting to support a larger move. DXY is lining up for another dip for a rally, right? And therefore, all of the things are actually in the favor of a move like this. But we are talking about a monthly move, right? So this could be another year in the making. And this is why I keep saying, from a COT perspective, institutional players, this could remain, range bound for another year. And that's a long time to compute when you're trying to trade this as a retail trader, right? So what I'm looking for right now, if I was to take this from a shorter time frame perspective, is my bias is clear. I'd like to see DXY rally, right? I'd like to see DXY tag 108 before a half decent drop. That for me supports the concept of falling back down to rise, right? Taking this particular area, we might even take this area, and then obviously drop back down as we get the bigger rally. And this could even be, all the way back down here, right? It could even be all the way down there in terms of a two move, bigger picture, right? So that's how I'm seeing this at the moment. I think the COT data is probably supporting this in terms of the transition, but we're talking about weekly COT data for a monthly move, right? So now let's take this, one step further. Get rid of these again. Let's take this one step further and look at this, say, on a daily time frame. On that daily time frame, is there any other supporting evidence for the fact that we might drop down, to rally? Well, we've got a false bar, right? So again, if we carry on up, right, how far up is up having to be before we get a decent move back down? The weekly move for me supports, this. So again, how I'm using this in my bias is I'll be keeping an eye on the COT data. Are we ready yet? Definitely not. And therefore, I think what we're going to see is a rise in the buys, right? Then we get a drop off in terms of the sell. So this is the daily now into the weekly. Then obviously we'll get the rally on the DXY pullback, hopefully from 108 back down to 105, 104, maybe even 103 if it's deep. That'll give us this pullback move here. Then what I'd like to see is obviously a pretty decent rally, as obviously DXY is doing that particular move. And then obviously I think for me, the next move is probably up and away before we get that bigger pullback as DXY makes my kind of final move in terms of where we go. That's going to affect the stock market. That's going to affect crypto, commodities, etc., etc., etc. So I think for me, it's just a question of bigger picture. Nothing's really changed in terms of Aussie dollar right now. I'm not expecting, a mega move. I'm expecting this to stay range bound. Give me that kind of consolidation, kind of up and down and back down again, you know. And at that particular point, I think then we can start looking at, where we change and how we change from there. But I think we're weeks away, if not months and longer. All right. So I hope this kind of answers the question in a long-winded way, but I hope this also kind of see how you can kind of put the pieces together. This is obviously using things like the Weiss wave. This is ultimately using the volume profile, using COT data and the Elliott kind of bias. You know, if I look at this from a larger picture, although I can kind of look at this from a daily perspective or an 8 hour, which I think is what you had, on the question, I don't think I'm seeing any real accumulation just yet. I think this is still corrective, bigger picture. And I think, if I was to take these drawings back off and zoom right in, let me zoom right in on this at this point in time, right? I think what I'm seeing right now is we technically need to break at least this higher band for that, break of structure, which will end up then leaving, or leading to a potential drop back down. Right? That at the moment is, from the low, and I got to keep going back, back to the lows and back to the basics. We've had a pullback, which technically changed a few things, right? Because this has created a higher low. So at this particular stage, right, we've then gone, if this is the higher low, that character technically has changed, right? If the character has changed, we've gone up, we've come down, we've got a new higher low, right? So at the moment, we've yet to form a new higher high, right? So in an ideal world, we grind up on the daily, we pull back on the weekly, we push up bigger time frame, right? So let me just see what the monthly is doing from a stochastic perspective. Yeah, we still got to push up, right? So I think for me, short term up, medium term down, longer term up. That up move is where everyone gets excited that, we're off to the races. And then I think we get a deep pull back 1-2. That 1-2 gives us obviously the first move and the first signal. This could end up even being a Wyckoff spring type move, providing we don't come, underneath this changing the whole scenario, right? So for me, I still think it's a while away yet. I'd like to see this monthly, overbought and dropped and then looking. But, keep in mind, right, if you're talking about a monthly time frame like this, there's going to be some short opportunities when we break through this particular level, right? And if we break through this on that smaller time frame, what you'll be looking for then is dropping down from, monthly, weekly, daily, 4 hour, 1 hour, right? And then from that time frame, you're going to be having a short bias with a change of character. So we get a short bias change of character. What you'll see probably is the COT data will flip again because the leverage funds are playing these games on the smaller time frames, right? Although it's a big time frame, bigger picture, the asset managers are, long term. So I think for me, if the numbers are relatively flat, 2,000, 3,000, 4,000, rather than 10,000, 20,000, 30,000, then realistically, we're going to remain pretty much range bound for a longer period. All right. So again, hope this makes sense. If not, again, just throw some questions in there. Comment obviously on this video and so on. And even if you do it back into the technical question channel, so we can all kind of keep track of this conversation, then, be my guest, feel free. All right. Anyway, enjoy the rest of the weekend. Thanks for watching this, guys, and I'll see you on the next one.